Good day everyone and welcome to another webinar by Depreciation Accountants. My name is Raj Rana and I'm the Managing Director here at Depreciation Accountants. I've been involved in this firm since 2009 and prior to this had various accounting positions in and around the world, especially in Kenya, the United Kingdom and Australia. My experiences range in a variety of fields including property investments, insurance, banking, retail brands, beverages, hospitality and many more industries. Before we begin, a very big thank you to everyone who has subscribed to our channel and supported us on our YouTube journey. Please keep subscribing so we can update you not only on the government stimulus packages, but also on the upcoming 2020 tax season. In today's video, we'll be discussing the tax benefits in investing in a brand new property with special focus on depreciation available for investors. The last couple of months, you all have been following me on the webinars on the government stimulus packages. This was mainly based on the COVID-19 stimulus packages that the government had announced. However, as things are now returning back to normal, we are hoping that investors will be back investing into property. So this is one of the many information webinars that will keep you, the investor, up to date. Moving on, our partners, BMT Quantity Surveyors, a specialized firm in providing depreciation schedules, have prepared more than 600,000 of these depreciation schedules for property investors across Australia. In a recent survey, the property investors were sent out information pack, and we found out that 42% would choose a house as their next investment property, 21% favored a unit or an apartment, 19% showed an interest in a townhouse, 9% would consider a house and land package, 6% would consider a commercial property, 3% of the investors were unsure about their next move. Also in this survey, BMT found out that 63% of investors would purchase a second-hand property as their next investment, and only 33% would consider a brand new property. So this webinar brings out the advantages of investing in a brand new property with special focus on the tax benefits. Now, brand new property often attracts an abundance of potential tenants, seeking low maintenance, neat and tidy properties with urban convenience. As a result, these properties are likely to provide consistent rental returns and a very low vacancy rate. When building or buying a brand new investment property, there are significant increased depreciation deductions on offer. BMT Quantity Surveyors are one of the best firms around Australia who have consistently provided the right support to our investors looking for the best depreciation deductions. We and our clients have full confidence in their approach. Now, just moving on to some numbers. The table on the screen would show you some calculations which have been done. As you can see, this is on a new built depreciation assessment. Looking at the property, the 3-bedroom unit, purchase price of 700,000. The first year deductions, 14,406. And looking at the 5-year cumulative depreciation of 61,946. The average annual cash return there is 4,584. So just moving on, these figures are based on the diminishing value method, and the first 5 years annual cash return has been calculated on a 37% tax rate. So looking more into the table, you can see that the 3-bedroom house has an average return of 4,114, and a 3-bedroom townhouse has a return of 3,878. So just looking at these figures, you can see that the newly built depreciation would give clients a bigger return, especially on the 3-bedroom unit, returning on the first year deduction of 14,406. Now again, just mentioning that use the diminishing value method, and the first 5 years calculated on 37% tax rate. Investors in brand new property are entitled to claim this depreciation for a decline in value of the building structure as well as plant and equipment assets inside. Now, depreciation legislation changes passed in November 2017 and they eliminated the claims available on previously used plant and equipment assets found in second-hand residential property. Now, BMT's investor survey revealed that 50% of property investors have little to no understanding of this legislation. The survey also found that most investors are targeting second-hand properties. Investors in brand new property are not affected by the 2017 changes and can continue to depreciate all plant and equipment assets. So if you're unsure, please give us a call or send us an email and we shall explain to you more in detail. But definitely investors in brand new properties are not affected by the 2017 changes. However, if the property has been lived in before being sold, the new owner can no longer claim depreciation for these assets. The increased cash flow from depreciation is one of the main benefits in investing in brand new property. Investors can also claim capital works depreciation for the entire cost of the building structure over 40 years, rather than just claiming any remaining years at the time of purchase. Now, moving on to the screen again, there's a second table which we have done, and this is basically the depreciation and capital works deductions available to investors. Now we've done on the brand new property, so you can see a 1-bedroom unit, purchase price of 500,000, and the first year deductions will be 10,085. And we compared that to a 2-year-old property, which is also a 1-bedroom unit, same price, and you can see the first year deductions are 5,105, nearly 50% difference. So as you can see, there's a large amount of deductions available to new investors who are looking at new properties. We are fully aware that during this COVID-19, things are still restricted on the purchase of properties. However, we are here to help you. Things are moving into the right direction, and the aim of this seminar was to give you a bit of the tax benefits on depreciation. I hope this has been a useful webinar. Myself and my team at Devonshire Accountants are available to assist you, so please do not hesitate to contact us. Our next information webinar will be on a 6-month rule for developers. So we'll be releasing that soon in June, and it'll be on the 6-month rule for developers. Lastly, please subscribe to our YouTube channel and don't forget to click the bell for future notifications. Our contact details on screen as well, and we're here to assist you in the best possible way. Please also follow us on Facebook, Instagram, Twitter, and obviously on YouTube. Lastly, I can't thank enough to BMT Quantity Surveyors as our partners and who provide us a lot of information, and we work with them hand in hand, and I would highly recommend that using their depreciation schedules give us the best maximum deduction. However, stay safe, follow social distancing, and look after your family and people around us.